In this video, I'm going to be showing you a ridiculously easy scalping strategy that just works. If you're here looking for some overly complicated high-tech system to outsmart the market, well, look somewhere else. This video, it's not for you. But if you want something that is straightforward and actually brings results, then you're in the right place. And about a week ago, using this exact strategy, I made roughly $19,000. Sounds surprising, right? And maybe that has something to do with you being told that trading is hard and complex stuff. But today, I'm going to show you why that couldn't be further from the truth. Look, 80% of your trading results comes from 20% of the effort. And that 20%, it's the simple stuff. And this strategy, it's all about those essentials. I've also traded this strategy for over 7 months now live in my trading community. And here's the good part. It's been profitable every single month. And I've got the records to prove it. Now, with this data behind me to back up what I'm saying, I thought it was finally time to show you what I'm talking about so that you can also get results like these. I'm going to be explaining every single aspect of this strategy. And I've broken the strategy into 3 essential components. So let's go over them one by one. All right, so the pyramid of profit. As you can see, the pyramid has 3 different legs to it. We've got a range breakout strategy, which we talk about on this channel a lot. Those of you who don't understand it yet, or are still struggling with it, or have never heard of it, I'm going to show it to you in just a few seconds. We also have our 5 confluence system, which is what I'm revealing to you today for the first time. The 5 confluence system allows us to get into highly probable trades, not just any trade, okay? We want to make sure that we're in highly probable trades that are more likely to work out. And the way that we do that is through the 5 confluence system, utilizing the confluence matrix, which I'm going to show you in just a second. I'm not gatekeeping any of this. It's all going to be available to you in this video today. So let's have a look first at how the range breakout strategy works, because that is the key to all of this. So it's a 4-step system. You identify 4-hour key zones, you identify the 5-minute range, you then observe the 50 SMA, and then you wait for a break and closure. You then enter on the retest and hesitation with 1 to 2 risk reward ratio. That is the 4 steps of the strategy. Now let's go into it a little more in detail. So step 1, you're identifying 4-hour key zones. Let's have a look at the 4-hour key zones in this particular example. So as you can see here, we have these particular zones right over here. So we've got a zone over here. Okay, obviously price is rejected here. Now where is price currently? It's up here. Okay, price is up here, and we are waiting for price to retest this zone and go a bit higher. Okay, so that's essentially what we're looking at right now. There are more key zones down here. Okay, so essentially the 2 main key zones that we're looking at are right here and right here. Price has broken above it though. And we're waiting now to see what happens on the lower time frames. Okay, so let's go now to the next step, which is identifying the 5-minute range. Now on the 5-minute, once again, we have got 4-hour structure. Okay, we have price breaking above 4-hour structure. Okay, and we are waiting for price to break and close above. Okay, and that is the next step. Observe the 50 SMA and wait for price to break and close. So the 50 SMA is over here. It is pointing upwards. Okay, that's very important. We are also currently above the 50 SMA. So that is a tick for that particular rule. Price has also broken above, okay? Price has broken above the zone that we've made on the 5-minute, okay? Price has broken above the zone, which means that we are simply going to wait for the break and closure to happen, and we're going to enter on the retest for step 4, okay? We're waiting for price to retest here and hesitate. Okay, so price will hesitate at the zone, okay? Perhaps push a little lower and then go, okay? You move your stop loss at break to break even at 1 to 1, and that is our A+ setup, okay? That is what we're looking for, and here is the result of that particular trade over here, okay? This is the result of that trade. So that is our range breakout strategy, okay? Now, how do we know we're taking high probability trades? Because as you can imagine, there's a lot of break and retests that happen, okay? Now, there are 5 things you can look at to assure that you are taking high probability trades with the strategy, and I've not spoken about this before. So it's very important that you listen up and take notes. So the 5 confluences here is the 50 SMA. Is it trending in your direction? So if you're taking buys, is your 50 SMA pointing up? Okay, if you're taking sells, is the 50 SMA trending down? Okay, very important. Is the 50 SMA perhaps sideways? Okay, that is going to be things that are potentially for your setup or against it. So be very wary of this. Now, are your 4-hour zones in line with your analysis? So first of all, is price moving with higher highs and higher lows on the 4-hour time frame? Secondly, are you currently in a 4-hour zone? Meaning that if, for example, price is currently in a 4-hour resistance area and you're trying to take buys, well, that's against you, right? Your 4-hour zones are not green. There's no green light on your 4-hour zones. We want green lights on all of these if we want to take high probability setups, which I'm going to show you, by the way, exactly how to take A+ setups, A setups, sometimes B setups, but we don't take C setups, okay? And I'm going to show you exactly how to do that really soon. Then you're also going to look, is price overextended, okay? So what that means is essentially, if we look at this example over here, has price already gone to take profit before tagging us in? So let's say, for example, let's say price hasn't tagged us in yet, and price is already up here. We're waiting for price to come back down to tag us in and then go, right? Well, if price is already up here, we're pretty overextended, and that is a no-go, okay, for that particular setup. We want price to push through here, quickly tap us in, like with this particular trade, and then go. We don't want price to push aggressively, then come back down, and we end up catching a falling knife over here, because with that momentum, it could very easily push back through your order. So I hope that makes sense. That is when price is overextended. And another rule, just so you guys have some insider information here on some of the source that I drop in Crown Club, but essentially, if price is over 150% of your TP before coming to tag you in, so if price is already roughly around here, goes all the way up to here, which is roughly 1.5% of this, and it starts to come back down, that is a no-go, okay? We do not take trades like that because there's just too much. There is too much pressure and momentum being built to the downside, okay? So that is what price being overextended means, okay? So if price is overextended, that is against our setup as well. Is the S&P 500 correlated? Now, what that simply means is that if we are looking to buy the NASDAQ, we want to make sure that price, for example, on the S&P 500, say this is a zone on the S&P 500, we want to make sure that price is starting to bounce, starting to reject a zone on the S&P 500, okay? We do not want the S&P 500 to be tanking when we're trying to take buys on NASDAQ, because NASDAQ often follows the S&P 500. So we want the S&P 500 to be correlated, all right? Now, is there an imbalance? Okay, that is the final confluence. Is price imbalanced? So what that simply means is, those of you who studied ICT concepts, okay, is price imbalanced when we get into a trade? Okay, that is very, very important. What that means is that, for example, has price pushed very far ahead of your entry? So say we wanted to get into price, again, in this example over here, say we wanted to get into a trade here and price has already pushed up aggressively before we get in. Then there is an imbalance underneath, okay? Say there is an imbalance underneath here. We want to be very careful because price often seeks those imbalances, and that's going to put you either into drawdown, okay, or it's going to potentially make it so that you lose the trade. For example, down here is an imbalance. Basically, price has not returned back to this area. There is what some people call an FVG, fair value gap, basically a gap in price, and price often likes to come back down to it over here. So that is one thing to bear in mind as well. If you have this imbalance below, so directly below your setup, you want to be very cautious of this. Those of you who don't know what an imbalance or an FVG is, please YouTube it now. Find out what it is, and if there is one underneath your setup, you're going to want to be avoiding that setup potentially, okay? And that is one of the confluences that if it's against you, it's going to count against the validity of that particular setup. Okay, so let's go over the confluence matrix. All of these confluences we just spoke about, okay, go into the confluence matrix. Now we've got an A plus setup. Okay, we've got an A setup, we've got a B setup, and we've got a C setup. Okay, now we want to always be taking the A plus setups, obviously. Okay, we want to take the A setups as well. Okay, you can take that at full or half risk depending on how confident you're feeling. You can then also take your B setups if you're feeling super confident, but only take it with half risk. And if you've got a C grade setup, you do not want to trade. Okay, so how do we determine whether it's an A plus setup, A setup, B or C grade setup? Well, it's with these five confluences over here. Okay, and what we want to do is have all the green lights. Okay, we want green lights on all of these confluences. Okay, that is what makes for an A plus setup, as well as if we've had a liquidity sweep. Okay, now simply put, what a liquidity sweep is, let me show you an example on this chart real quick. A liquidity sweep would be if price before breaking out over here. Okay, let's have a look here. For example, there is a zone over here, okay, a range. If price came down, wicked out over here, then pushed and broke out towards the upside where we were wanting to buy, that is a liquidity sweep. Okay, and we know this because price will often sweep here with a wick and then push aggressively in the other direction, and that classifies as a liquidity sweep, which is a plus, and can turn your A setup into an A plus setup. Now an A setup, simply put, has all of the confluences. You've got green lights on everything but one of them is out. So for in this instance, you would be trading into a 4-hour zone, or you would be in a 4-hour zone currently. You wouldn't be overextended. The S&P 500 is confluencing with you. The 50 SMA is pushing in your direction, and there are no imbalances below you. But you are trading inside of a 4-hour zone. This is still an A plus still an A setup. Okay, which you can take with full or half risk. Now, why I say full or half risk, maybe you're in a losing streak currently and you don't feel super confident. You're going to want to go for half risk, okay? You're going to want to reduce your risk. But if you are feeling confident, you're in a winning streak currently, then you can go for full risk with this. Then B setups, 2 confluences are against you. So in this example here, you're in a 4-hour zone. Okay, so you're not in the ideal place to take this trade on the 4-hour. Okay, you aren't overextended. Okay, you have the S&P 500 against you as well, so that's also not necessarily ideal. You've got the 50 SMA pointing in your direction, okay, and there are no imbalances below you. So you've got 3 out of 5, which is a B setup. You can take this setup, maybe leave it. You can take it or leave it, okay, depending, again, also kind of like with this. So in this case, I would actually say you're wanting to either take it or no trade, okay? So half risk or no trade, okay? That didn't seem to work. So basically half risk or no trade, okay, with this. So when you're taking this kind of setup, you're going to want to either leave it or take half risk. Essentially, it's 3 out of 5 confluences are in your favor, but 2 are against you. So again, not ideal in this scenario. And then you get a C setup where there are 3 or more things against you, and then you're definitely not going to want to take that setup. All right. And that is how you stick to taking highly probable trades using the pyramid of profit. That is exactly what we trade every single day within Crown Club. It's totally free to join. The link is down below in my bio. You can trade along with me and my team every single day. We record all of the results as well in that Discord. We have a big community in there of 16,000 traders with hundreds of people live every single day on stream. So make sure you click the link below to hop in there. Now, if you want to learn this system in detail, I have a free training as well in the link down below in the description, where you can learn this full training and how to trade just like me. And it's completely free for you to learn. So thank you very much, everybody, for watching this video. I really appreciate it, and I will see you in the next one.